Excellent. So our pledge is as follows. I don't chase freedom, I build it. I turn profit into power and I treat my business like the asset it is. I create cash flow that outlives me, own the business, own the outcome. I will face discomfort with discipline, embrace hard truths over easy wins, and welcome coaching as a shortcut to clarity. Think like an investor, act like a leader. I will rise above noise and scarcity, make decisions from vision, not fear, and align my business, personal, and financial life so that I can own my time, shape my legacy, and never trade hours for dollars again. I don't wait for permission. I move boldly, contribute fully, and honor my word. Why not me? Why not now? Our deal of the week this week is, I like it because in a price point that many of us could realistically actually pull off. Now, the company that acquiring them is much bigger, but it's in a price point that we could do. So the acquiring company is, their name is Prodex Incorporated. They've been around for 48 years. Their value is approximately 132 million, approximately. As what they do is they make powered surgical tools and like related components that help doctors do certain procedures. They also do a little bit of engineering and manufacturing of those tools for other medical device companies, but their primary focus is on like building the actual powered surgical tool. They are acquiring a company called Advanced Precision Machine. Advanced Precision Machine is a machinery metal parts manufacturer, and they make the medical devices and the aerospace that people like Prodex tell them to. So Prodex designs it, Advanced Precision Machining actually manufactures it. And Prodex has been using advanced precision machining a lot. And as what is happening is Prodex is acquiring their manufacturer for $8.65 million. 6.65 of it is cash, and then 2 million of it will be on a note for 63 months that will be paid out over the next 63 months. Now, as a reminder, there's three primary reasons investor thinking businesses will buy other businesses. Number one is cash flow. This is likely not a cash flow play, though it does bring stability to cash flow because they now control the manufacturing arm. So manufacturers can raise prices, change things at their whim because you're not them. They can do whatever they want. But you, as the person that's using them, have to abide by what they say. But if you're the controller of those price points, you don't have to worry about that. So it does stabilize cash flow, but it's not helping. They're not buying it because they get a lot of cash flow from it. Their primary motive is likely the capability of the manufacturing arm that they did not have before. So they didn't have manufacturing. Now they do have manufacturing. They aren't really entering a new market. It's just like a downstream piece of who they are. It's a part of their ecosystem. They have to use that anyway. So they acquired it to build it in, and it's going to help their ability to control things and them being controlled versus just being at the whim of the manufacturer. And they see it as a means to stabilize their company's valuation, continue to grow. It's not like a huge deal. 8 million is a lot of money for a lot of people, but for them, it's a stabilization play. They can control the market more, and it will help them continue to reach their aspirations. So I figured it was a great opportunity for us to see that even though like they're not making a lot of money off of this, this is a bigger picture for them. It's, I'm going to acquire this. I want to implement this. We can sell to some of our competitors, but we get to control the pricing, how we get it, when we want. We don't have to deal with fighting back and forth because we control them. So I thought it was a good example of how investors think. Sometimes it's small moves just as much as big moves.